TurboTax doesn't catch this mistake, which could cause you to pay tax twice. I personally almost paid an extra $24,000 in AMT because of this mistake. Fortunately, it might not be too late for you to actually reduce your tax bill. Welcome to the step-by-step guide of entering your incentive stock options into TurboTax. I'm going to assume that you've already entered in most of your personal information, so let's go ahead and go to Personal Income, select I'll choose what I work on, and then we're going to scroll down to the investment income portion, and on the bottom it's going to say ISO exercise and hold, standing for incentive stock option exercise and hold. And in this case, exercise is the same as buying. You typically use that term when you're referring to the contract. Incentive stock option is a contract, it's not stock. You're using the right in the contract to buy company stock. So that's what they mean by exercise and hold. So let's go ahead and click update. It's asking, did you buy any incentive stock options in the previous tax year that you're filing for? And in this example, we're just going to assume yes, you did. And then it's going to ask, did you sell that same ISO stock during that exact same year? And for the sake of this example, we're going to select no. So this is a complete exercise and hold, meaning that you didn't sell it in the previous tax year that you exercised, or in the same year that you exercised, you didn't sell the company stock. Let's go ahead and click subscribe. Okay, so for this person, I named them Olga Butterfree, and they work at Tesla. So let's go ahead and hit continue. Enter your purchase information. So did you receive Form 3921? And the answer should be yes. And just as a note that this form doesn't typically have to be filed by employers until the 31st of January. So it might not make sense to file your taxes before this date. And I'll tell you in just a minute why it might not make sense to file your taxes for another few weeks after that date as well, because there's still some forms that may be coming through that you may need to help file your taxes. So you just want to be cautious if you're filing before the 31st of January, that you actually have the forms that you need. So in this case, we're going to assume that yes, you do have your Form 3921. In this example, I'm going to have the exercise price of $10 and a fair market value on the date of exercise of $15. And that's important for AMT purposes, which I'm just going to address in just a second. But first, I'm also going to note that I'm assuming that there's 2,000 shares that were exercised. So let's go ahead and click done. And if there are no more exercises, then you can just click done again. One quick note on the exercise and hold. Exercising and holding doesn't necessarily mean that you've held for a huge long time period, but in reality, we just need to know if you exercised and sold in the same tax year. So technically speaking, you could have exercised December 31st at 11:59 p.m. and then you sold it the very next morning. And technically speaking, that's still going to trigger AMT because they were in separate tax years. You didn't sell the stock in the same year that you exercised, even though the holding period was just a day in that case. But we need to pause here for a second and zoom out on your equity. Let me help you visualize this example to help you better understand your own personal circumstance. So I've pulled up this graph to help us visualize how the taxation of incentive stock options work. So along the x-axis here, we've got various time frames such as the grant date, vesting, when you exercise, and the actual sale of your stock. And this line covers potential stock prices, so this just about covers every single situation that you could run into, from gains to losses and everything in between. So the example that we just put into TurboTax had an exercise price of $10 with the fair market value on the date of exercise of $15. Now that creates a $5 spread between those two numbers, and that's going to be considered the bargain element. That number, that $5 spread times 2,000 shares that were exercised, is going to be taken over to the AMT calculation on Form 6251. Now that doesn't mean that that $5 spread is your AMT. It just needs to be taken over to the AMT calculation, and it plays a role there. You may be a little disappointed in the amount of taxes that you owe this year, but the good news is that it might not be too late for you to actually lower your tax bill. But CPAs and TurboTax tell you how much you owe, but the goal is actually to owe less. That's why I created my firm TechWealth to specialize in owners of equity compensation to minimize taxes and optimize your equity. So if you'd like to work together, more information in the description below. Okay, so back under personal and personal income, if we scroll down to the portion that we were just looking at, investment income, ISO exercise and hold, you'll notice a number sitting outside of that box. And that number represents the gain that we just reported on that portion. And now that gain is either going to be reported as a bargain element for AMT purposes or as ordinary income on your W-2, depending on the holding period. But in this example, we didn't sell in the same year that we exercised in, so it's going to be considered a bargain element for AMT purposes. Now, if you know exactly what's going on, you know that this number may be actually triggering AMT. So whether you are smart enough to know to jump ahead to this other tax situation tab, or if you have TurboTax just walk you through everything, they're gonna take you to this tab anyways. So regardless, you could run into this mistake. And personally, I almost lost about $24,000 in this mistake, and TurboTax doesn't catch it or warn you of it. So that's just something to be aware of. Let's go ahead and click on that tab, Other Tax Situations. Now, the very first thing that you'll see here is Alternative Minimum Tax. Now, to their defense, it doesn't say you should start it, it just says Update. So maybe that you should have taken that as like a key of, oh, maybe there isn't actually anything to enter in here because it's already been entered. And so maybe update was sufficient enough in TurboTax's mind to not confuse you. So when you hit update, it says, let's see if you need to pay the AMT this year. And so ask if any of these things apply to you. And the very bottom one is exercise or sell of incentive stock options in the previous tax year that you're filing for. So up to this point, it doesn't, I guess, calculate that you just said that you just entered in that information. So I would have hoped that TurboTax would have said, hey, something's fishy here, or had some pop-up that said that you need to be careful that you've already entered this information, but it doesn't. So maybe update was supposed to be that warning sign, but that's just extremely, extremely vague if that was supposed to be it. So let's go ahead and click yes, because this is the problem here. Yes, I did exercise incentive stock options, and so you click on this one, I exercise ISOs, and then you'll hit continue. And then it asks, let's grab that information. So it talks about your incentive stock option adjustment, and it teaches you how to do it, which is the spread that we were just looking at, that spread between the $10 exercise price and the $15 fair market value on the date of exercise, times 2,000 shares. So we come down to this box and enter $10,000 because that's what it's supposed to be. Now, this isn't actually enough to trigger AMT in this example, but if it were a higher number, and again, if it's completely dependent upon your income and your own unique circumstances, but if this number were any higher or your income was any lower, then there's a good chance that your federal refund would then jump this year. And therein lies the problem with double taxation that TurboTax doesn't catch. Now, here's how to actually solve the problem. Along the top here, you'll want to click View, Forms, and then under Open Form, you'll want to find Form 6251. Now that the alternative minimum tax form is pulled up, we want to look at line 2I, which is the exercise of incentive stock options. And if you look at 2I, the number there is $20,000. And we know that's wrong because when we look back at that very first page where we entered our incentive stock option, exercise and hold, the number that was sitting right beside the tab there was $10,000. And that was representing the gain. So that number should be right there in 2I, but we know that that number has doubled, and it's because we went to the AMT portion and we entered it in, and TurboTax didn't stop us or warn us or anything. So that is where you can actually pay double tax on this whole thing. So you just have to be careful. You have to know where to look. And if you think that this is going to save you at least $1 in tax savings, go ahead and hit the like button down below. That is how you spot the problem. Let me show you how to fix it. So we're going to go back to View, click Step by Step. It takes us back to the AMT portion. We're going to hit Update. And in this case, we are going to actually update it, and we're going to delete this. We're going to say, yes, we want to delete this, and hit Done. And we can double check it by going up to View, Forms, and if we look at our Form 6251, line 2I, it has that exact number, so we know that we're not paying double taxation. So that's just the exercise of incentive stock options. Let's go ahead and talk about the sale of incentive stock options. We want to come back up here to View. Here are a few ways to potentially reduce your tax liability this year. Fortunately, it might not be too late for you to actually lower your tax bill this year. So let's go ahead and click on personal and then deductions and credits. Select I'll choose what I work on. And then we're gonna scroll down to retirement. And then there's a traditional or Roth IRA. Let's go ahead and click start. So with a traditional IRA, you can actually contribute regardless of your income. The problem is that if you make too much, you can't deduct that contribution. So if you think you earn too much, just know you can always contribute, but you just can't always deduct it. So let's see if that's a possibility for you or not by clicking on traditional IRA for both you and your spouse if you're filing jointly, or if you're filing single just under your own name. Now you'll note on this page that it says answer yes if you plan to make a regular contribution by April 15th of this current tax year. So it's not too late to make a contribution and reduce your tax liability, assuming that you're able to deduct that contribution. Go ahead and click yes. This typically isn't the case, so I'll select no. So this is where it asks us how much we actually contributed, and this is where we're going to play with the numbers and see if there's a benefit, and if so, how much of a benefit we can get by contributing. Obviously, we want to stay within the annual contribution limits, but feel free to play with the numbers. Let's take a look at the second way that we could potentially reduce our tax liability this year by going back to personal and deductions and credits. Select I'll choose what I work on. Then we're going to scroll down to medical. Under medical, it says HSA. That's where we're going to click update. And if you have an HSA that you were able to contribute to for the previous tax year that you're filing for, you may be able to make a contribution here and actually deduct that contribution. Let's go ahead and say that both of these individuals had access to a health savings account. Click continue. We're going to assume that they didn't use their HSA to pay for medical expenses. By selecting no, hit continue. In this example, they didn't inherit the IRA. And did Olga put money into the HSA this year? Let's go ahead and select yes. And this is where, again, we're going to play with the numbers based on how much we actually have to contribute to an HSA. And if we want to do that, then we can see how much of a tax benefit it's actually going to provide us. Now we're talking about actually selling your stock. And at the very start, we only had an option, which was a contract, so we didn't own any stock. When we exercised, we were given stock. So now that you're an owner of stock, whenever you decide to sell it, you're going to have to report that on either a couple of forms. The first one's going to be Form 8949 for those capital gains, and then that's going to flow through Schedule D and then end up on your 1040. So how is this actually reported onto TurboTax? Well, let me go ahead and pull up TurboTax and let's take a look at this. So first, we're going to click on personal and personal income again. We'll select, I'll choose what to work on, and we're going to go down to the same section that we were at before where we entered in our incentive stock option exercise and hold at the bottom there, but we're actually going to go towards the top of that investment income section, and you'll notice the one that is titled stocks, cryptocurrency, and so on. We're going to go ahead and select update. Now, it's asking if we sold any of these things, and the key that we want to see here is it says this section covers these forms and files. The first one's going to be Form 3921, which is applicable to only incentive stock options, so we know we're in the right place. And then those forms that I just previously mentioned, Form 8949 and Schedule D, is where we're going to be reporting the sale or gains and doing offsetting of capital assets when they are sold, or in the case of incentive stock options, when they're disposed of. And this last form is 1099B, and this is going to be given to you by the brokerage account that is holding your investments or your stock options. So in the case of incentive stock options, when you dispose of those assets, your brokerage firms, whether that's E-Trade or Fidelity or Schwab or Carta, they're going to have to give you this form by the end of or the middle of February. And if they don't do that, then they have to pay some fines. So that's kind of the second date that you want to pay attention to in filing your tax return, is the middle of February. Hopefully you should have all of your forms by middle of February at the latest. So if you're filing before then, just make sure that you have that Form 3921 and the Form 1099B. Otherwise, you could be filing prematurely. And hit continue. And then we're going to select this one on the left. And again, it's got the forms that we're looking for, 1099B and also 3921. Let's go ahead and select that and hit continue. So this page is having us pull our 1099B directly from this brokerage account that we are have our assets at. And for the sake of this example, I'm going to go ahead and click skip import. Then it's going to have us enter in the brokerage account that we work with. So again, that could be E-Trade. I'm just going to put E-Trade in here. And again, we know that we're in the right place because it's asking us specifically about equity compensation. It says ESPPs, RSUs, NSOs, and so on. But the very last one is ISOs, incentive stock options. We'll go ahead and click yes. Then it asks if we have more than 3 sales on our 1099B. I'm going to go ahead and keep it simple and go ahead and click no and continue. And then let's go ahead and enter these in one by one. That's just going to be easiest and going to be least complex. And this is why you're going to want your 1099-B. You don't want to be filing this before you receive it, because this isn't going to be information that's going to be readily available unless you have kept detailed records, which most people, that's not going to be the case. The nice thing about having your 1099-B being pulled directly from your brokerage account is that you don't have to enter in all this information, but let's go ahead and just say that this is a long-term basis reported to the IRS, covered, and then it's going to ask the type of equity that we have, which is going to be ISOs, incentive stock option, and then we're going to go through and enter in all of this information. So I'm going to scroll to the bottom of the page here, and it's going to mention a couple times cost basis being incorrect or some other cost basis, and this is really important to get right because this is exactly where double taxation happens, both with incentive stock options, but I would say more commonly with RSUs and NSOs. But in the case of incentive stock options, it gets really complex because you actually have what's called a dual basis. You have your regular tax basis, and then you also have the alternative minimum tax or AMT tax basis. And so you have to find the difference between those. And if you're disposing of your incentive stock options stock, then you have to make a negative adjustment on Form 6251 on line 2K, which is right below where we reported in 2I, where we actually were triggering AMT. So this is why I highly recommend working with a professional, because it gets really complex. I'm just a random guy on YouTube, so please don't take this as investment, legal, or tax advice. If you go down and click continue, it's going to actually mention adjusting your cost basis to ensure the best outcome. And this is because it is so common for the 1099-B to report no basis when in fact you actually had a basis by paying taxes on it already. So really important to get this right. Please avoid double taxation at all costs. We'll definitely want to double check things, and so that's why I'm going to go back up to the view portion and click forms. We're going to click the open form button and search 8949 for capital gains and losses. Let's go ahead and open that form. So this is where we're going to want to double check the type of sale that it is. Again, depending on the holding period, you'll notice in part 1 it's going to be short term, part 2 is going to be long term. You'll just want to double check the information here. And the information from this form is actually going to be pulled into Schedule D. So, you're welcome to double check Schedule D, but just know that Schedule D is actually getting the information from this form. So if you check this one, it should be correct on Schedule D. If you sold your incentive stock options in the same year that you exercised, also known as a disqualifying disposition, we're going to go to the very top where it says wages and salaries, and then it says Form W-2. We're going to click Update. And that same number that we entered in as the ISO exercise spread between the $10 exercise price and the $15 fair market value on the date of exercise, that amount is actually going to flow through to our W-2. And then let's do a quick review of the W-2. We'll hit review. We'll go ahead and skip this page for now by hitting continue. And then we want to look at box 1. These are the exact same boxes that you should find on your W-2, and in box 1 it should have your salary and the spread of the ISO exercise, again assuming a disqualifying disposition. But we shouldn't see that disqualifying or that spread. We shouldn't see that in boxes 3 or boxes 4. That's the tax advantage of incentive stock options, is that you don't have to worry about FICA tax or Social Security and Medicare tax. So it should only be appearing in boxes 1, and then if applicable, state tax boxes where you have to report income to your state. Also note that incentive stock options don't have withholdings, so if you didn't withhold enough, box 2 should be relatively low, creating a tax liability. Hopefully it's not terribly unaffordable for you, but just note that if there is a large tax liability, it may have been the lack of withholdings that happened when you exercised and sold within the same tax year, creating a large number in box 1. Filing your taxes is extremely important, but as far as making financial decisions based off of taxes isn't as important as you may think it is. Let me show you why in this video right here.